Hello? Bank and institutional traders? I don't know what you want. If it's money you're after, then I have none I will give you. But what I do have is a very particular set of skills. Skills I've acquired over a very long career. Skills that make me a nightmare for traders like you. If you stop now, I will not pursue you. I will not come after you. But if you don't, I will pursue. I will find you. And I will profit from you. I don't know if you have ever seen the movie called Taken that stars Liam Neeson, but that's one of the most famous lines from that movie. It's one of my favorite movies of all time. He is such an awesome actor. Look it up if you haven't seen that scene, but I thought I would throw that in for the Forex market just for a little fun today. But ironically, we are actually going to go through some of the skills that can make you a nightmare for banks and institutional traders, which is who we as retail traders are trading against. If this was a superhero movie, they would absolutely be the enemy. Although they're not. No one's a bad person if they trade for a bank or an institution, but that's who we're trading against as retail traders. So in today's video, what I'm going to do is help you to understand the key concepts. There are 3 of them that you need in order to actually make money in the Forex market. See, a lot of people come into the Forex market just trying to make money without acquiring the skills first. So in today's video, we're going to talk a lot about mindset and discipline. We're going to talk about a particular system you can use. Skills you're going to acquire is that system that you can use in order to have an advantage over the market, and we're going to talk about risk management. These are the main 3 factors of Forex trading. If you stick around throughout the rest of this video, you will have all of those in your back pocket the next time you place a trade in the Forex market. So let's take this market back as retail traders, and I will see you guys after the intro and disclaimer. See you soon. Welcome back. So the trade you see on your screen is based around a systematic approach, a systematic strategy I created to give me an edge over the market. If you were to ask me, Steven, does that mean this trade is going to win? My answer would be, I don't know. And no one does. No one can absolutely predict 100% what the market's going to do, and if they can, they are way richer and way more wealthy than the richest person you're thinking of right now. They're not. That's not possible. So as traders, what we have to do is create a statistic advantage or an edge over the market. And that's what I'm going to teach you at the very beginning of this video, because this is going to be the most interesting part. And as a society, because of social media and other things, and this is me included, we have the attention span of a goldfish. So because of that, we're going through the most interesting part first, and then we will jump into the just as important parts like mindset and risk management. Right now, let's go over the systematic strategy that we're going to start with in this video. This is going to be a counter trend strategy. What that means is that the market is going to be going down if you're going to buy it and going up if you're going to sell it. A lot of traders think this is a very difficult way to trade, but I'm going to give you a few hints and pointers that is going to make it, again, very systematic and make it extremely easy to trade in the way of counter trend. So the first thing we're going to do, as always, is go over the conditions of the strategy. So the first condition we have is going to be that the market must be at structure. We harp on this a lot. In today's video, I'm going to give you a full strategy, so stick around. If you're used to me saying structure, that's not the only part we're going to talk about. We want to look at 2 different things when looking at structure. How recently was that level of structure tested? Like here on the pound yen that we're looking at this moment, this was the most recent level of resistance. The second thing we want to look at is how many times was this level tested. Scrolling the chart back, you can see that this level held as support multiple times in the past. So if we have those 2 factors met, and other than that, there is no other reason I'm looking for a counter trend trade. But if we have those 2 factors met, I'm going to show you what I like to do in terms of day trading. So if I'm going to be day trading and I'm going to day trade a counter trend system, this is what I do first. I look at a daily chart. I ask myself, are we at a recent level of structure that has been tested multiple times? That answer becomes yes or no. If that answer is no, I do nothing. I don't trade that specific currency pair. I'll let that one go. I sit on my hands instead of trading. Patience pays. Patience is a huge part of trading. So be patient if that's not the case. But for me, if that is the case, in fact is the case, then what I like to do is drop down to smaller time frames. I normally start with dropping down to about a 4-hour time frame. I'll drop down to a 4-hour time frame, ask myself, is there an entry? I have my line pointed out. I know I'm at a level of structure I'm paying attention to. I want to see an entry reason. And I'm going to go ahead and tell you for this specific case, and if you go through the markets and test this, the system has to be tested as well. Forgot to mention that at the beginning. We'll talk more about that in a minute. But if you go through the markets and test this, you can see which currency pairs this gives you a positive expectancy on, a positive outcome on throughout historical data, and that'll give you what you need in order to create an actual strategy based on this. What I like to do in these areas is wait for double bottoms. That's it. Or a double top if I'm looking at a resistance level. Wait for some type of price action pattern. And you can change that rule if you'd like, but start off by testing these specific areas, recent levels that have been tested multiple times, with just double bottoms and double tops. Do that first. So let's go ahead and do this. We're at a 4-hour chart. Do we have a double bottom or a double top? No, we don't. We drop down now. I'll go to a 1-hour chart. Do I see a double bottom on the 1-hour chart? I didn't mean to say double top a second ago because we're looking to buy the market, so we'd be looking for a double bottom. We do not have a double bottom here on the 1-hour. So then, dropping down to the 15-minute chart, what do we have here? We have a market that is now at an area of interest and it's put in a price action pattern that I have tested in historical data and saw that it gives me an edge over the market, which is this double bottom. And this double bottom will not work everywhere. And it won't always work here, but you actually get a statistic advantage. Test this for yourself. Don't trust me. Go out and test it yourself. But for me, for the way I've tested this, I get a statistic advantage if I trade double bottoms in areas of support from a daily chart and double tops in areas of resistance from a daily chart. When I say support and resistance areas on a daily chart, I've already given you the rules for that. All it is looking for a recent level of structure that has been tested multiple times. And then using a double bottom or double top, again, has given me an edge over the markets. And with that being the case, that's all I'm really looking for, is to take advantage of that edge. This is where, at this point, having the system, and I'll go ahead and share stops and targets with you. For stops, very simply, ATR indicator is right up here at the top of your screen. Right here is the ATR indicator. I use a 1 ATR below the lowest low of the double bottom for a stop loss. So I'll look for the lowest low of the double bottom and my stop loss will be 1 ATR below that. For targets, all I did was look at the daily chart yet again. And you can do this on a 4-hour chart instead of daily. I like looking for larger targets. So on the daily chart, excuse me, I actually did do this on the 4-hour chart, my bad. So on the 4-hour chart, and you can go down to hourly if you'd like to, or up to the daily. This part's completely up to you. What I like to do is do this on a 4-hour chart, look at the most recent level of structure support, especially if I'm trading down the 15-minute chart, which is where this double bottom is being traded on. The 4-hour chart, I go up 2 time frames, if that helps. I go up 2 time frames. So from the 15-minute, it would be 1 hour, then 4 hour. If I'm on the 1 hour, I'll go up 4 hour daily, and that's where I'll have my target set based on. But here on the 4-hour chart, after moving up 2 time frames from the 15-minute chart, I just put my target at the previous level of support I expect to become resistance. So if this market continues in trend, this is an area I know it's likely to continue in that trend from. So for that reason, my targets are going to be taken off right there. Then I ask myself, going down to the trading time frame, do I have more than a 1-to-1 risk reward based on those 2 factors? 1.4. So yes, I have more than a 1-to-1 risk reward. I have my entry reason, a double bottom. I'm at a level of structure that was recently tested and that has been tested multiple times. That's the entire system. I have a stop loss, 1 ATR below the low of the double bottom. I have a target set at my previous level of structure support that I expect to become resistance. So for the first part of this video and the first important part of you being able to make money in the Forex market, you have to have a system that has been verified in historical data to provide an edge over the market. You want to become the casino. I'm sure you've heard this analogy. If not, casinos make money not based on the fact that they always win. Sometimes players win in a casino, but casinos know that because of fear and greed, eventually they come out on top with a statistic advantage. You want to become the casino instead of the player and come out on top with a statistic advantage. The only way to do that is through verifying that your system has made money in historical data. So with that being the case, make sure to backtest this and not just take my word for it, but that is the system I'm going to share with you today. I hope that made sense. If not, you should be able to grasp the system. It's quite simple if you just go through that part of the video a couple of times. Now let's shift gears. Before we shift gears, I did want to let you guys in on this. I just woke up the next day and now I'm seeing that we actually ended up winning this pound yen trade down on our 15-minute time frame based on the system you learned in this video. As you can see, the market did play around a bit with us. We went up about halfway to our targets, came down to break even, back up, back down to break even, up a little, down into the red just a little bit before finally the market pushed up again about halfway to targets, back down again to break even, and then finally pushing up and actually hitting our targets back at that previous level of structure support that we thought would become resistance. After doing that, that area has become a little bit of resistance, not necessarily right on cue with that area, but we have seen this market drop since getting into that zone. So just wanted to show you guys the live trade did play out well. I'll bring it back to the next part of the video and talk a little bit about the second most important part. In my opinion, the second most important part of becoming a profitable trader is going to be risk management. Your ability to manage the risk you have on each and every trade is going to be so important in terms of your emotional stability, which is what we're going to talk about next. So risk management wise, the only way that I have found to really control risk is a stop loss. Make sure you're using a stop loss. This stop loss allows me to say, okay, from these 46 pips, and I'll show you this on the TradingView platform actually. If I was to place a trade right now, trade, and create a new order, and let's say I wanted to buy the market and I wanted to buy it at market and I had a 46 pip stop loss. Right now, since I have the stop loss set at the 46 pips, I can decide what percentage of my account I want to risk. And you maybe ask yourself, well, Steven, or asking me, what is the best number for me to risk? That's not up to me. That is such a personal decision from your standpoint of the risk tolerance you have. What would you be comfortable risking and losing on this particular trade? Remember, casinos lose sometimes, players win. So you're going to lose trades. What is an amount you are comfortable losing on any specific trade? For me, personally, with my risk tolerance, which has no reflection on what you do, mine is between 1% and 2% per trade, depending on my confidence level on that specific trade. That's one aspect of risk management. The other aspect would be risk capital, the amount of money you actually have in your account, and that's going to be completely up to you as well. And the other aspect would be risk tolerance. Overall exposure. Overall exposure would be how many trades can I be in while risking 1% to 2% of my account, right? So once you have all of those in order, those are the three questions you have to ask yourself. Once you have all of those in order, it allows you to be so much more emotionally stable and disciplined to the strategy that gives you an edge over the market. These are the things that are going to make you a nightmare for an institutional trader or a bank, because you now are actually trading consistently based on something that gives you an edge over time, which is exactly what they do. So with that being the case, you can beat them at their own game. And that's what we're trying to accomplish here. So risk management plan, the system I just taught you, if you go through and test it through historical data on multiple pairs, find the best pairs that it trades on, find the most profitable pairs that give you the least amount of drawdown, come up with your risk management plan based on risk capital, risk per trade, and overall exposure, and then be sure to stay disciplined to that. Backtesting will help you with discipline. Demo trading, don't go out and just start trading live. That will help you with discipline. Your risk management plan will help you with discipline. And right now, if you're a trader that's just come into the market over the past few months and your main goal is to make money, I cannot stress this enough, you will more than likely lose money. You will more than likely blow your account if you don't change your mindset from I need to make money to I need to learn how to trade. If you are less than 6 months deep, or if you are just not profitable yet, your main goal should not be to make money. Yes, I get it. Eventually, your main goal is to make money. But your main goal is to learn how to trade, because that's the path that gets you to the point where you can make money, be profitable, and become a consistent and professional trader. As always, that's exactly what I want for you. That's why I produce these videos every single week, trying to help you get there. So if you found value in it, click that like button. Follow us on Instagram. We're going to be doing some giveaways on the paid programs we have. Those paid programs are also in the description if you want to speed your process up. We have a very organized approach that takes you step by step through all of what I just explained to you in a much more in-depth way. So if you would like to check that out, links are in the description. We also give you trade ideas, or at least my own trade ideas, the things that I'm looking at in the markets throughout the week via email. Again, those are in the description. Some free trainings are in the description. Other than all of that, be subscribed to be alerted when we come out with new free education just like this here on YouTube. Don't forget the Instagram thing. We're going to be doing some giveaways that I'm really, really excited about. Probably some MacBooks. We're going to be doing a lot of free education that will only be available to people that are subscribed to our Instagram. So follow that link in the description to get that. I am so tired of talking that I'm going to stop now. So best of luck in all your future trades. I hope you have a great rest of your week, and I will talk to you on the next video. See you soon.